That's the closing bell on Wall Street, and now it's market domination overtime. We're giving you full team coverage of all the moves to get you up to speed on the action from today's trade. We've got Tim Urbanowitz, Innovator Capital Management Chief Investment Strategist, as well as Yahoo Finance's Jared Blickery joining us here to break down the moves. Jared, question of the day. We were right near records for some of those major indexes. How'd we close out here?
All right, we do have records for the Nasdaq 100 and the Composite, but I'm looking at the S&P 500. We missed that we were looking for 63.89.79, so we missed that by a whopping 18 cents or so. Doesn't look like we made it today, or is that 28 cents? My bad there. Nevertheless, just a bit short, but we'll move on here. We had some decent gains for the week, and I'll go over that real quick. Here's a 5-day price action up 2.43%. In the Dow, it was 1 1/3%, and let's get a look at the Nasdaq as well, up almost 4%. And we took a look at the bond market and dollar at the 3 p.m. change, and let's just skip right to the sector action. So here we have tech in the forefront, up almost 1%, followed by financials and then healthcare. Each of those outperforming. To the downside, we have utilities and real estate, each of those interest rate sensitive sectors posting losses for the day, but not the week. We'll go over some of those weekly gains and losers in about 30 minutes, Josh, you and I. And then Apple up 4.25% today, Alphabet up 2.5%, Tesla up over 2%, same for Netflix. So we did see some outside movement from some of the bigger stocks here, and we'll also go over some of those bigger size movements in those bigger size stocks in about 30 minutes. The Mag 7 definitely outperformed this week. And a final look at the Dow here. Aside from the mega caps, which we were just looking at, we got United Health up 2.5%, McDonald's though sliding about 0.75%, and IBM looks like it's the biggest loser, down about 2.5%. Nothing to write home about. Transports, let's take a real quick look at those because those were stumbling this week. We see the biggest one, Uber, down 3%, FedEx so up about 1.5%, and in airlines we got United up also 1.5%. And I'm going to take a look at semiconductors and software because that was a different market yesterday. We had semiconductors up, software lagging, and we got semiconductors up again today. Micron stealing the show, up about 6%, although Microchip was down 6.5%, Supermicro down about 4%. And as promised, here is software, a lot more red than green, and so we'll be able to dig into some of that as well in about 30 minutes, Josh, and I'll send it back to you on that.
Jared, I'm looking forward to it. Everyone stick around. 30 minutes, we are breaking down Jared Blickery's top takeaways. Always one of my favorite segments. We'll see you then, Jared. Tim, I'm curious, you're still here with us. You've been with us the past hour. We've been watching a little bit of this tech rally. Take me through other areas of the market that investors should look right now, right? Every day, Jared is breaking down that board. We're talking about one of the big tech names driving us back to a record high. Is there other areas of the market that you're talking to clients about a lot right now and that get you excited?
Well, Josh, I think broadly speaking, especially when we're hitting all-time highs, the most important thing is you want to be in the market. Those all-time highs, they come in bunches, they're clustered together. So you need to make sure that you're broadly exposed. But I do think we want to be a little bit cautious here. Again, we've gotten about 2/3 of the Liberation Day tariffs that are going into effect with these deals. That is going to slow things down a little bit. So we're looking at ways to add broad-based protection, things like buffered ETFs, dual direction strategies that can provide some outperformance, even if the market goes down, some positive returns. And then when we look at consumer stocks, I do think, some stocks like Walmart that are catering, that are value plays, are going to be very important here as consumers are going to tighten up a little bit more. We think that labor market continues to weaken. Again, it's not something that we're overly concerned that's going to fall off a cliff, but we do think it benefits stocks like that, stocks like McDonald's, that really cater to the value and more cost-conscious side of things. Those are going to be important as well.
What would get you more cautious, Tim? And let me lay out two scenarios for you, right? We have the inflation report next week. CPI is expected to increase again in July, right? We have the stagflation issue happening right now, right? Inflation is expected to keep creeping higher. Labor market maybe get a little weaker. What is more concerning to you as an investor? Which one of those narratives?
Well, I think, Josh, if we were to see CPI increasing, not just over the next month or two, but over a more extended period of time, in our view, the tariffs are more of a one-time tax on a consumer, not something that's going to create sustained inflation. If we see a lot of these sector-specific tariffs going in, maybe you see it go longer. But if we do see inflation remain stubborn, north of that 3% mark on CPI, while we're seeing the consumer weaken, while we're seeing the labor market weaken, that would get us more cautious of a bigger, 10%, to even 20% correction. Now, we don't think that's going to happen. One of the things that we see with tariffs is because you have those prices going up, consumer spending tends to pull back. And when that spending pulls back, you tend to see prices that decrease over time. We've seen it in the past. We would anticipate that you would see that again. But I think bottom line here, Josh, is we don't want to get complacent. Right? We don't know what that impact looks like. It's still a very big piece of uncertainty for us. I think a lot of investors have written it off and said, hey, markets digested tariffs really well, didn't really matter. I wouldn't go that far. We don't know what that impact looks like yet, but we are going to see what it looks like coming up. So yes, you want to stay in the market. We want to capitalize on these all-time highs that are coming in bunches, but you have to consciously be thinking about risk management. And volatility, quite frankly, is very cheap right now. It's a good time to be adding it in the portfolio.
VIX popped above 20 on that jobs report and went right back down, right? I mean, it hasn't really been a part of this rally. Tim, I'm curious, when you mentioned the tariffs eventually coming into the data. I was speaking with economists back in April, and sort of the pitch was midsummer. You'll start to see it in some of the July data, so maybe right now in August, and we've started to see a little bit of it. But when are you expecting to maybe see more of it in the data? Is it we get to September and October and we're still not seeing it, and then maybe you're a little bit less concerned?
Well, Josh, I think one of the things that we've seen up to this point is, especially the first go round after Liberation Day, everybody was so unsure of, are these tariffs, are they going to be temporary? Are they going to be permanent? Are they going to keep going higher? And it kind of froze companies from they don't want to just increase prices and find out, hey, these were temporary, and then all of a sudden we're losing market share because we increased our prices, or we've lost some of our customers. Now there's more certainty around the path of tariffs. We know they're going to be higher. Yes, they're not quite at the level that was proposed out of the gates, thankfully, but they're pretty substantial. Okay, and I think you're going to start to see those price increases. And to answer your question, I think you're going to start to see it, July, August, September. But it is something that is going to be playing out throughout the rest of the course of the year. So you want to be alert to it. And again, if you look at where we were at in June, okay, what the collected tariffs rates were in June. We have about another 8% to go to get to where those effective tariff rates will be based on all the deals that have been announced. So that's a big jump. Again, not saying that the market and the economy cannot digest these tariffs well. What we're saying is you just need to be cautious and not just make the assumption that it's a done deal and it's already happened, like we see so many investors doing right now.
Tim, we're going to be waiting for that tariff impact to come on the data, and we're going to have you back for it. I appreciate you hanging out with us for the last hour. It was great.
Yeah, great to be with you, Josh.
The next big moment for markets comes Tuesday when we get the July Consumer Price Index report. Inflation picked up in June, and there's been debate over how much of that was driven by tariffs. Then came a surprisingly weak July jobs report, and that was enough to shake markets and push most traders to expect a Federal Reserve rate cut in September. Meanwhile, President Trump is casting doubt on that data, even ousting the head of the Bureau of Labor Statistics. Now you have that upcoming CPI report that also relies on survey data from the BLS. So how should Americans think about that upcoming report and data in general? Joining me now is Erica Groshin, Senior Labor Economics Advisor at Cornell University, the Cornell University School of Industrial and Labor Relations. Erica served under President Obama as the Bureau of Labor Statistics Commissioner from 2013 to 2017. Erica, it's great to have you here. And I do want to just rewind to last week. Of course, you have the president casting doubt on the data that comes from the BLS. What is your message to investors, to Americans, as they're hearing that doubt being casted as someone that's been in that seat? How would you sort of speak for the data?
Well, first of all, thank you for having me on. And I'm always happy to hear people talking about data. And so I appreciate the chance to join in. So The data are as reliable and trustworthy as ever. These data are produced using the highest professional standards and produced by the most dedicated data nerds that you have ever met. So there is really no reason to trust the data any less, and really the attacks on the data show a fundamental misunderstanding of how the data are collected and how they are processed. So I don't think that there's no reason not to trust the data, and there particularly right now. Now, if the procedures at the BLS were changed, then I might worry about the quality of the data. But no change has been made, and the data are still good. And I think they will be good certainly as long as the acting commissioner, Bill Wyatrowski, who's the deputy commissioner, who I appointed, will be in charge. I don't think anybody should worry about that.
Erica, talk to me about the collection. How does it work? Let's use CPI as an example. It's coming out next week, right, for July. How does that collection process work at the BLS?
Mm-hmm. Well, now, of course, each program is different. Mm-hmm. So they're organized a little differently. So I'm going to focus on the aspects of them that are kind of similar from, say, the CPI and the payroll survey, right? Mm-hmm. So BLS, first of all, maintains lists of businesses, and it uses those lists to choose a stratified random sample, so a representative sample of companies that it reaches out to and asks to participate in the surveys. And we'll talk about this maybe a little bit later. Fortunately, response rates are falling, but still there's more than enough response rates for that the top line numbers are almost, the impact on the standard error of the top line numbers is pretty negligible so far. So these companies agree to participate, and then they're in the sample for a fairly extended period of time, and they're sending in these reports. And these are really reports, not opinion surveys. They are asked very concrete, objective information. So in the case of the inflation numbers, they are asked, what is the price that you have for this good or this service, right? Mm-hmm. And or it is observed. I mean, in some cases, it depends on the CPI is a whole. I mean, it's a market basket full of things, right? So it's everything that consumers buy. And so BLS has a special approach for each kind of good. So if you're talking about legal services, the BLS has a set of kind of standard legal services, and it goes back to the law firms and says, how much would you be charging now to make up a will that looks like this or something? It has a list of products like that. And if you're talking about bread, they look at the price of bread in grocery stores, right? And so it's this combination of all things. And some of the information, in fact, more and more of the information is actually collected other places, and BLS gets it. So airline prices, well, it turns out that there's a company that collects airline prices. So BLS isn't doing that separately anymore. It has a contract with this company that collects airline prices. So more and more of that information is not coming directly from BLS sampling people, but BLS has validated the approaches being used by these other companies, and then incorporates that information. And so that information for separate cities gets fed into basically, you think about it as a huge computer, right, or a server somewhere, and it's fed in separately by the product group. And then there are specialists at the BLS who look at the data, and their goal there is to understand trends, and through their understanding of trends, just make sure that there's no error in all of that. So there's a whole quality control aspect of it. But each one of those groups is looking at the data separately for those products. And they only know and only see what's going on for their product, because that's their job. And then when that part is done, there is a computer program that brings it together and estimates the inflation, the top line inflation rates. And that's done by a small group of people. And again, it's almost all automated, because remember, this happens over a very short period of time. Sure. And then the commissioner only sees the numbers when they are final, never sees any of the input into it, never sees any preliminary numbers. It is all done by the professionals. And the role of the commissioner is not to be weighing in on any release as it comes out, but to be doing the vision for the whole agency and thinking about how do we direct our resources to make our products better, speaking on behalf of the agency. It is not to vet the numbers or massage them. In fact, there's no way to do that with the current systems.
Erica, you did mention one thing that was interesting, right? Which is the survey responses coming down a little bit. And I think some of the argument that has been made out there would be maybe you can bring technology in some other ways than the classic phone calls that are still operated in some of the surveys, and you could do different things to innovate with technology. I mean, how realistic of a possibility is that? Is that a staffing issue for the BLS? Is that a funding issue for the BLS? Are those types of things really doable to change the survey and how it's done?
So BLS and most of the statistical agencies are still very survey-centric, but they are moving and changing. So the CPI has probably made more advances than most of the other programs because it's out there looking all the time for other kinds of sources to bring in. And even the payroll survey now is much more automated. I think most of the reports now come in electronically in various ways from the companies. That said, the falling response rates are still a problem, and the direction in which the statistical system as a whole needs to go is to incorporate more and more of all of this other transactional digital information in the economy. Totally agree with that. The agencies want to do that, but they can't stop doing the CPI the current way and direct all their money to designing the new way, right? They've got to keep producing it. And the same with the payroll survey. They've got to keep producing it. So what's needed is investment so that we can do the research to make sure that the new numbers are at least as good and hopefully much better than what we have now. And then you can let go of the legacy system. So that requires an investment, and instead, BLS's funding in real terms has fallen by over 20%. And right now, the staffing is down by 20% from what it was a year ago, and the senior leadership is down by 33% from what it was. And so this is a real problem. What BLS is doing now, it is keeping the lights on, it is keeping everything going, but it is really hamstrung in a core responsibility of statistical agencies, which is continual modernization, because the economy keeps changing, technology keeps changing, and BLS wants and needs to change also.
Absolutely. Erica, we're going to have to leave it there. Appreciate you joining us today.
You're welcome. It's my pleasure to be here. And happy Friday, everybody.
Happy Friday. Big moves in the pharma space are capping off a busy week of earnings. Despite many companies beating analyst estimates, shares are under pressure due to competition in the GLP-1 space. We're navigating how to play the pharmaceutical sector with the Yahoo Finance playbook. Joining me now is Courtney Breen, Senior Analyst of U.S. biopharmaceuticals at Bernstein. Courtney, Eli Lilly really stuck out to me this week because that stock has obviously had a great run over the last couple years. They're at the forefront of this GLP-1 trend. And then now all of a sudden it's down 20% year to date. It was down 15% off earnings. What's going on? Did we just sort of get expectations sort of overrun where the company's actually at?
Christian, and great to be with you today to dig into this one. I feel like I've been talking about it nonstop since yesterday morning when the results came through. We got two things from Eli Lilly yesterday morning. The first was the orforglipron ATTAIN-1 study, which is their oral GLP-1 drug in the obese patient population. As a reminder for those who aren't watching this super closely, we'd already received one set of phase 3 data for that particular drug, but it was in the diabetes patient population. And in this trial, many investors were expecting to see something in the range of 14% weight loss at that 72-week mark. What we instead saw was 11.5% weight loss at that 72-week mark. And so there was a severe negative reaction from investors. Importantly, what also came out, though, from Eli Lilly on Thursday morning was their earnings, their quarterly earnings. And in that, the most important question that I'd been being asked kind of going into the earnings was, would Lilly raise guidance for the full year? And what we saw with the earnings is that they bet on the top line, and that was particularly driven by both Mounjaro and Zepbound, their GLP-1s in the US, as well as a massive beat in the ex-US opportunity as they ramp up their business there. And then they raised their raised their full year guidance, and the new midpoint is now where the upper end of prior guidance was. This is a big call for Lilly to make that raise to guidance, because last year they made the same move, and yet then they missed in Q3 and Q4. So there'll be much more conservatism being brought into this raise. And so it was a strong signal for that near-term performance, but also really kind of overshone all of that news with the miss, and that really translated to the stock reaction.
And how does that miss work in terms of what happens next with the product, right? I think weight loss drugs have brought a lot of investors that maybe don't normally invest in the pharmaceutical space into it, right? Because they're everywhere right now. People know people that are taking them, and it's become one of those kinds of trades. I mean, what happens next on that front?
Great question. There's a few things. I mean, this isn't the only trial. As I mentioned, we'd already had one in diabetes. We have another overweight trial, kind of weight-focused trial that will be in a type 2 diabetes patient population that will read out shortly. That will then get filed as a package for the overweight and obese indication that they will be seeking then FDA approval on. We expect that FDA approval to come kind of in approximately the midpoint of next year. But those still aren't the only trials. There is many kind of patients in phase 3 trials for this oral GLP-1 product. Something in the range of 16 or 17,000 patients are in trials for this product right now. So it's being very extensively studied. And importantly, they're testing it not only against placebo, but they're also testing it head-to-head against some other oral GLP-1s in terms of oral Sema, which is the new product from Novo Nordisk, and as well as Farxiga, an oral SGLT2 or diabetes drug. So lots of data still to come out. I think one thing that's really important to note, while investors wanted 14% weight loss, that was kind of the bogey number that everyone was anchored on, patients and physicians have a slightly different view. And I think it's important to know that this still looks like an incredibly solid product. I think the big question is just now, what else comes further down the pipe from other competitors? And is there any chance that they could beat this 11.5% placebo-controlled weight loss? Or is this the best that we're going to get, and Lilly's going to retain this leadership position over the long run?
And Courtney, I've only got time for one more quick one for you, but we just zoomed in on Lilly. I'm curious if there's another name sort of at the top of your list in this space that you've been watching as we've been getting these results.
I mean, we're watching the entire market.
Sure.
Everyone's kind of playing and dabbling in the GLP-1 space. What I will say is there is another name that's not in the GLP-1 space, but that I will call out that had a fantastic day yesterday. Another one of our outperformed stocks, Gilead. What's really exciting here is they are innovating also on convenience. They're innovating in terms of the once twice yearly injection for HIV prevention. This product is now 6-7 weeks into launch, and we got very, very exciting kind of positive reinforcement from the company on the management call. But we also got fundamental data that demonstrated both the HIV treatment market as well as this HIV prevention market is looking incredibly strong. So this is kind of a tale of different stories in the convenience space, where we're looking kind of consumer-oriented solutions for challenges that exist for our long-term health.
Always a lot of moving parts when it comes to pharma. Courtney, appreciate you helping us break those down.
No problem. Thank you.